let's start with the economy on the update. December in Zambia has increasingly become what economists describe as a high liquidity, low output month. This liquidity fuels spending on social events, firmly entrenching December as a peak consumption period. However, this surge in demand is not matched by production. Agriculture is largely in planting phase, construction slows due to rainfall, and many formal businesses operate below capacity as workers take industrial leave. The mismatch between high demand and constrained supply often leads to price pressures, increased imports, and exchange rate stress. More critically, much of the spending is absorbed by the informal economy, generating limited productivity gains. This seasonal pattern exposes a structural weakness in growth model. The policy challenge, therefore, is how to deliberately convert this seasonal liquidity into post-festive savings, investment, and long-term productivity, ensuring that short-term cash surges translate into sustainable economic growth. To unpack this issue and explore policy options, we're joined by Kelvin Chisanga, an economist who has written extensively on macroeconomics, dynamics, consumption patterns, and productivity-led growth in Zambia. He now joins us. I'd like to welcome you to the update.
Thank you so much. My pleasure being here.
It's not too early to say Merry Christmas.
Well, I think it should be in place.
Yes.
Yes.
We've just tried to explain what is taking place right now. There's a slowdown, of course, that we see, but a huge spending margin that we also see from an economic perspective. How significant is December in Zambia's liquidity overall annual economic cycle?
Well, the December economic activity has a confluence of different factors at play. Obviously, we know that this, as you have said, it's actually has a high liquidity drive, and also, on the contrary, lands with a very low productive scale, because we tend to go on the industrial break in most of the cases, and that brings high consumption demand on the other side, meaning the industries like tourism, travel and hospitality tend to actually shoot up from there. And even when you look at the aspect of, the retail market, get to be driven with a lot of factors from that point, where there is a need now for us to see the movement of essential goods from that perspective. So as you have said, a number of people actually tools down, and they tend to do other things from that perspective. So meaning the production cycle drives on the side of the consumption-driven factors. Meaning if you are even just to be practically into this, again, certain sectors like constructions of some sort, be it road or buildings or whatever it is, they tend to slow down because they cannot build during the rain season. And that also hampers the whole fact of what we are talking about in this case. So again, coming back to the multiplicity of payments and income, obviously we know that people, even at individual level, they receive the 13th pay, they receive the bonuses, they receive a number of things. So if you put all this together, that's what compounds the case, because obviously whatever is happening at a small level scale, it also gets into a bigger scale where a dividend is coming maybe for shareholders, or a company is receiving a profit sharing sort of arrangement. So all these are interplaying into the whole situation of December. So that slowness of productive activity, and also matching now with the aspect of people being at home and also spending less labor in the production cycle, is what actually compounds to this case.
When we talk about high liquidity and low output, it always sounds like a mismatch. But one of the issues that people will ask is, what are the long-term effects of allowing such a pattern to continue going on? Should we see some sectors of society continue to work and be productive during this time? Because when you talk about factors like the weather, people really need to down tools at the point.
Yes. You see, the effect is almost immediately. And I'm sure you always receive the effect around January, where people start complaining. And I'm sure it's a phenomenon which has been created for some time. In economics, we call it January effect. The January effect is where now you start now gallivanting, looking for money, looking for all these things. So that is what actually interplays there, because obviously people get money right in the middle of the month of December. The money that was supposed to be, what was meant to be paid by the end of the month. So the expenditure patterns get to be in high drive, and again that does not match with the income generating capacity, meaning even at a personal level, be it even from the concept of a company, if you start spending your cost center for a month, meaning you will spend more even when it comes to December, because obviously you have started spending much earlier than it's supposed to happen. So that actually has a ripple effect in the beginning of the year. People tend to have some pressure. If it even goes to those that are making decisions, they now face health challenges and all those things. So we will not be able to improve health outcome from that basis if we tend to go with what basically plays out with the December expenditure.
How does the December expenditure now impact inflation, for instance, impact exchange rates, and just the whole spectrum of the first quarter? Because like you say, as economists, you call it the January syndrome of some sort, but sometimes you will see it extend to the whole first quarter where people fail to recover. But does this also mean the same for industry?
You see, maybe even just before I could even jump on that one, I want to clarify one thing. Obviously, the biggest factor here is that we have a situation where we build up a number of complex of income or earnings around this period, and we tend even to make haphazard, plans around expenditure columns. So in the end, what will be able to happen in this case that we will strain ourselves so much, we will even deepen ourselves into savings and investment aspect. Then by the time we are even coming to realize or having that conscious mind around what we have done, it will even be too late. So for us to do the recovery, it takes a bit of time. So even when it comes to the industry perspective, you find that the industry will want to rush for sales promotion of certain equipment which they did not even plan light in their budget structure. So that comes in to be also a very bad effect also to their first quarter of the preceding year. So this also brings a cascading effect even across the whole sector, and that now brings a point where we are saying the post-December effect are quite aggressive, and that does not even sit very well even across the whole component, even with the government itself. Sometimes the government tend to do the same. So what I'm trying to put across here is that the December month has a high liquidity level but lands with low production. That is now something that we need to see how best can we really plan around December's activities, especially when it comes even to the industry like banking and financial institutions. They need now to plan certain product that can suit for December. If anything, if you are to go with the government should come up with some policy moderating factor which should work now to incentivize the certain key sectors that should be able to work to boost investment and savings.
I was going to go into that as well, because policy is critical. Targeted savings, for instance, or investments would help. But when you talk about savings, people will always never be ready because they'll say, maybe my money is not enough. But what can we do to ensure that individuals, companies stay afloat with targeted policy-related models?
Okay, so from the macro level, there's a need for us to have some beautiful incentives, especially coming from the central government point of view, where they should help the financial and banking institution to have some incentives, especially with those that are working out to save during this period. Maybe to open up a window from 1st January to the last day of the January. I mean, to the 1st December to the last day of January. This should be a window for good incentives around the banking sector, so that whoever is doing activities within the banking system should be able to have some favorable treatment around the returns that they are putting there or expecting to cultivate from that undertaking. And again, there is a need for us to also to have some incentives on the manufacturing companies who are basically doing the consumption items that are highly demanded in this period, so that they can do more and they can have more production capacity to expand from that point. So there's a need for us to look at a multi-dimensional aspect around this time. You know, the tricky thing that it's an entertainment month in short, but with its own package of that entertainment, it comes with a lot of activities around consumption demand. So there's a need for us to create some bit of policy moderation factors to ensure that we also grow the economy just from this effect that happens in December.
What is the role then of financial institutions to deliberately ensure and encourage savings as opposed to borrowing? Because that's what escalates usually in January. People are looking out to borrow. Today, we were just talking about exam results being announced and children opening on the 12th of January. And around even just mass media, everyone is saying we need to pay those school fees.
You see, this is where we basically have a very poor capital formation in the country. And the reason why I'm even pointing to this is because, you see, you may find that when the government is in the market, through the bonds and treasury, they create that demand which basically suffocate the private sector and by extension even the individual consumers from that perspective. So I feel the banking sector should now have diversity of solution in regards to what is basically happening around financial services that they're offering in the market. And again, the most critical element here is that I think through the intervention of government with the government bonds and treasury, there must be a way we can lessen their participation during this period, so that if anything, more productive activities should be directed to SME as opposed to what we have actually been seeing, as a pattern which has developed on a perennial basis. So there's a need for us to create some wonderful products around December and January, so that people can be more participative in the banking sector and more participative on the side of savings as well. And much to this also, I think the banking sector has failed to actually extend, awareness around financial literacy as well. So there is a need for us to have more robust drive around financial institution to make sure that the financial literacy or an education should be able to be some of the things that we should be able to work out from that basis. And much more, I think it also calls a multi-sectorial approach as well, where even you people in the media help so much to, give that financial knowledge around this period so that it can have more meaningful, you should involve more people to talk about savings around this time so that we can create that culture. I think we need to indoctrinate a situation where saving should be part of the game. If I have 100,000 kwacha, 10% of that 100,000 kwacha, I should be able to force it into savings, or even to the most, if you feel you can even get 20%. So it should be just a system that should be mentally developed in ourselves as well as Zambia, and that should also be indoctrinated in the education patterns as well. So we need to broaden our perspective around savings and investment, and that's a culture which you need to cultivate going forward.
Let's conclude on looking at what Zambia would like to see, and I'm sure you've seen a lot of strides in looking at a production-led and investment-driven economy. As we go into 2026, what are your thoughts around what models will work and propel this?
Okay, so looking into the future or the medium term, I think Zambia has given a very substantial stabilization platform, as I mentioned, even last time, I think. What we need to do going forward is to create a mind that is conscious around what we are doing now in terms of how do we borrow. Are we borrowing the right way, or do we want to borrow for consumption? So going in the future, even just basically from the macro macroeconomic perspective, I think we need to do more of value addition, and that is what is calling even for all the sectors, be it agriculture, mining, tourism. So we need to cultivate that mind of adding value to what we have, especially on the primary resource side of things. And again, we need to cultivate a situation where we basically have to plan ourselves with the mind of just making a special contentment of what we are producing for ourselves. We need to lessen the import processes so that we can basically enjoy what we have here. And again, looking at the good pattern of the rain season, I think we are yet to give another bumper harvest coming 2026. So if we can do the planting now, it can also be a good thing. So I would hedge, even you in your own capacity, please look for a small piece of land before January comes. You can do something out of that. So what I'm trying to say is that even in the midst of election, we still have to make something better. And Zambia is getting to that recovery phase, which is strong now. And what we need to do now is to put a lot of good things right in place. So what I'll be able to say, maybe by and large, is that we are at a point where we have made substantial impact in so many key areas, even when it comes to forex market. We have done a very good job now, and especially at the point when you are not even importing fertilizer. I think that has given a good base for us to strive from there.
I'd like to thank you, Kelvin Chisanga, for coming.
Sure.
Economist, just looking at savings, investment, productivity, and a sustainable economic growth beyond 2025. That has been our discussion. And remember that you too can be a part of the successful narrative of the economic story. This is the update. Do stay tuned.